Alrighty, guys, welcome back. I know setup is looking a little bit different today. I'm using a different setup, but same charts, same text, same fundamentals. So hopefully it should be good. As usual, we'll start with the dollar index. It did fall a little bit yesterday following the PPI data that came out. Still looking strong fundamentally. Um, but yeah, we fell below 110. It's looking for support for a bit of a bounce there. And also the Fed, the market has priced in less rate cuts for America, as can be seen by the strong US dollar. It's been sounding very hawkish, talking about the Fed, obviously, which has pushed the US dollar to just insane heights. So yeah, look, just back to it. I've got my chart here. It did reach 110.18, which is the highest the dollar index has been since 2022, right? We're talking about nearing COVID levels there. So that's something to keep in mind. Also, another thing to keep in mind is we've got two important announcements tonight. Number one, we've got the pound CPI data, and we've got US inflation data as well. Well, it's tonight if you're in Australia, and in the morning if you're in the UK or in America. So that's something to keep in mind there. We might see something a little more directional, or we could range depending on how this data comes out. So yeah, look, just getting the chart up here, looking at the RSI, it does look a little bit overbought. It is an overbought zone, so potential short-term pullback. I do have some support there on the 109.06 level and also 109 psychological level. We talk about these all the time. So those are some key levels to keep there. And we've also got some key support at 108.55. So that's something to keep in mind. Again, please trade with caution, especially with the data coming out tonight. It is highly important for both the pound and, most importantly, the US dollar. All right, and since we've talked about the pound, let's move on to the sterling, shall we? Alrighty, and look, now we're back to the pound again. Very, very critical data for the UK as a whole. Look, it's no secret, it's no lie. The place has been a mess. It's been in shambles. Rising yields, indicating instability in the bond market. Right? Look, it's tonight's number is going to be very, very important. There's been a lot of concerns over the UK's economy, and look, it's been ranging. So it's still trading slightly higher than 10200. But again, guys, tonight's number, please trade with caution because it's very pivotal for the sterling as a currency, not just against the US dollar, but against all other pairs as well. Again, there have been many concerns over stagflation, persistent inflation with stagnating growth. It's a term people throw around all the time. But look, I'm just looking at this chart here, and there's a lot of limits to the upside, the pound's upside potential. A lot of limit to the pound's upside potential. Like the country's fiscal health is a great question at the moment. As just for anyone longing the pound, look, just be extremely cautious, especially coming into tonight. And again, look, the economy, increased debt. A lot of investors, especially quite sophisticated investors, are selling UK bonds with the rising debt there. So a lot of negative indicators for the sterling or for the British economy as a whole. So look, trade with caution tonight, but we will explore some technicals there. So we're exploring its lowest level in over a year, pretty much. There might be a bit of volatility around in this range. A further target, if we get to maybe 120, 100, that's a pretty big psychological level there. Another level that we can look at is 120.99, and a huge level is around again the 1-200. So if we breach that in the coming months or in the coming weeks, it could indicate further decline for the pound. So again, trade this with caution. I personally don't have any positions in this. I'm not sure many people do, but if you are, please manage your risk, especially coming into tonight, or if you're in the UK, coming into this morning. Trade with caution. Alrighty, we've talked about the US, we've talked about the UK. Now, time to talk about something that's a little near and dear to me. Let's talk about the Aussie dollar. So I've got it out here on my chart. We've got employment numbers coming out tomorrow. This could also be very, very pivotal for the Aussie dollar. So yeah, just getting my text up, we briefly had a breach over 6,200 there, which is a key level. And look, consumer confidence, the Westpac Consumer Confidence Index fell by 0.7 to 92.1 in January as well, showing continued pessimism among us Aussies, right? But yeah, look, the market is also looking at a 75% chance of a rate cut happening next month. So look, investors and smart money, obviously hedge funds, everything like that, the whole world is looking out for the employment number tomorrow, as well as the US data that is coming out tonight, or if you're in New York, this morning. So yes, look, again, tomorrow's number will greatly influence where the Aussie dollar is going to go. That being said, we have had a lot of support from China with our very, very close relationship there. So just some stimulus measures that have sort of kept the Aussie dollar a little bit supported. We'll look at the chart again. So it's trading around 61.90 with a bearish descending channel. RSI has climbed to around 38. I've been looking at, we got immediate resistance at 62.43. That's a 25-day moving average, by the way, followed by 62.88 and 6,300. That is a key level of resistance. We always talk about this psychological level, so keep that in mind. On the downside, we've got key support at 61.61, Tuesday's low, and January 13th low, 61.31. So again, just looking at my chart, those are all the techs coming into tomorrow, or before tomorrow's announcement. So hopefully that helps you make a little bit more of an informed decision around trading the Aussie dollar. Anyways, that's all, and we'll see you guys tomorrow. Hopefully that was educational, and I wish you guys a profitable trading week.